And make sure we are also using the banner properties, browse. The Black Friday banner, guys, it's the time of the year again where we celebrate the accumulations on Black Friday. Like last year, around this time, 2 weeks early, we started. Alright, that's done. Let's head over to the Discord and make sure I'm sharing my screen. Share your screen. Alright, but before we get started, let me check the chat. Should have waited for the break of structure. Yeah, that's what we do during these 66 days. See how we go. There's worse things than failing, but I just want to cover the Black Friday sale. I don't offer any discount codes or anything during the rest of the year. So if you already played with the thought of signing up for a VIP membership or just interested in the ICT all-in-one indicator, there are discount codes right here on our Discord server. There's a link in the description below where you can join us on Discord. And basically we have a 50% discount on the lifetime ICT all-in-one indicator and a 30% lifetime VIP membership as well. And for the monthly subscribers who just want to check out what it is like being a part of the Accumulation Zone community, we have a 30% discount for only the first 3 months of VIP membership. And yeah, also a 15% discount on monthly recurring VIP memberships. And this also counts for the ICT all-in-one indicator, the Scalper Pro, or simply the Livestream Pass. You can sign up using this link right here. And we also have a lifetime exclusive offer with a crypto payment. Only 3 out of 5 spots left, so if you're interested in that, make sure to check it out on Discord inside the Black Friday section. Alright, now we've talked about that. It's time to look at our funded account. We've started the 66-day challenge right here with Trade Day. And so far we've taken 1, 2, 3, 4, 5, 6, 7, 8 trades. Today wasn't a trading day, but I still journaled it during the London session here on our Discord live stream. We pointed out the market structure shift. We were ready to get filled. We set our limit orders on that fair value gap, but unfortunately we just took out the Asia sell side, and yeah, we removed our limit orders and called it a session. Not during every session we can get an entry or win a trade. It's part of sticking to your rules. Like I said, there are in my opinion, two ways how you can play the market. You either stick to a fixed rule set that you can rely on, or you simply develop that intuition and a strong gut feeling and be profitable with that as well. All right. That's the WOP shop. We have news coming up at 10 a.m. The consumer sentiment. Let's see if we already have a few people watching the live stream. Good morning, guys, here on YouTube. Yesterday we had a open Discord live stream. Today we don't have that anymore. So if you want to join that, now would be the time to use the... Come on, YouTube. I know you can get that started. The time is 2:40, so we have roughly 40 minutes until the New York Open. So no rush at all here. First want to see if we receive images here on the YouTube live stream. Yes, I'm connected. Everything should be working fine. We have news coming up at 10 a.m. It's just my internet connection. That's what I wanted to know. If you have any questions, ask them in the chat. That's not what I wanted to do. Come on. That's stupid. No, doesn't matter. And also get our Discord invite link into the chat. Create invite. And there you will find a list of all the... Oh, come on. Pin. Stupid little... pop out chat. No, anyway, screw it. We get started watching the charts now. Make sure everyone on the Discord is also able to join the live stream. Where are our VIP members? Right here. New York session stream is starting at VIP. At lifetime VIP. So we get a few more people joining. Good morning, Ease. Active widgets, 1%, 10-second delay, market pulse, XRP, sellers. Oh, that's pretty cool. I do crypto, but I don't trade it. I only buy and hold. Makes life much easier. There are better things to trade than crypto, in my opinion. But yeah, everyone else has a different opinion, likely. So let's start taking a look at, first of all, our DXY. The DXY, we spoke about the Asia session. We took the high, we took the low during London. London ended right here at 8. Our low came in right here. Let's get rid of these two lines. So we're right now, relatively speaking, at the low. We have a 15-minute inefficiency. Let's take a look at it on the 1 hour time frame. The 1 hour is really not that clean. Up and down, up and down, up and down. Can't really say anything certain about DXY, other than yesterday we predicted the accumulation, manipulation, distribution. But after we hit our major sell side targets, we reversed completely with lots of momentum. Afterwards, once again, we consolidated during Asia, taking out the previous day's high. London takes out the Asia high and takes out the Asia low. Right now, we're consolidating or being held below the midnight level. We have news coming up at 10 a.m. So we will see how that plays out. On the daily time frame, we are above our daily bearish share value gap right here. So we would expect support here and wait for price to revisit this volume imbalance right here. Unfilled volume imbalance or new day opening gap. So we will see how that's going to play out. Hourly time frame, 15-minute. Today is Friday, the last day of the week. Some traders avoid Fridays. I don't. Right now, here we have the high of the week. Let's label that high of week. Text size 12, and we put that to the top. Right. High of week, low of week, so we can get an idea of what we are dealing with on the DXY. Now we switch over to ES on the daily time frame. Here on the daily time frame, yesterday we caught a short from our 50% resistance if we measure from the high to the low of our entire pullback. After bouncing off the 50% of this entire move to the upside, right here, this purple line. So really, yeah, we framed shorts yesterday with the intention of getting into the daily bullish fair value gap down here. We've done that now. We've delivered into this fair value gap. We got rejected, like I said, from the 50% daily bearish fair value gap, daily volume imbalance. So yeah, right now, after already taking out the previous day's low, so we cleared first day's low here on ES. We already rebalanced this bearish candle. So two scenarios. We're gonna get a expansion to the upside and go back to the high of the week. This will likely depend on what the DXY is really up to. If the DXY wants to retrace into yesterday's range or stay where it is right now and continue even higher, do some sort of a reaccumulation after the expansion yesterday to continue to expand up even higher. Here we have that unfilled volume imbalance. Let's also mark out some targets to the upside on the DXY. Upside on DXY would likely mean downside on ES and the indices. That's our volume imbalance on the daily. Let's leave that where it is, but change the opacity. Like that. Buy side above, we have all our session lows as sell side below. We've been following the DXY nicely. Right here we have perfect equal lows, bearish fair value gap, rejected from where? To the tick exactly the midnight level. That's what we want to see. Like I said, lower prices on the DXY equals higher prices on ES and NQ. Sorry. And yeah, let's take a look at the Nasdaq daily time frame here and hide the ICT all-in-one indicator. Before we get started, all these drawings here for the lower time frame, we put them in here. Visibility, yep. Change the visibility. Don't want to see the lower time frame analysis stuff on the higher time frame really. So yesterday we spoke about the 50% of the daily wick. That's where we saw a textbook 2022 reversal setup. We are inside a daily bullish volume imbalance, so we can add that to our chart here. Daily bullish volume imbalance, we have relative equal highs, buy side that wants to be taken maybe, and simply continue the bullish momentum. But we need the DXY to continue lower to be able to see that. We broke the trend line after 1, 2, 3, 4 touches. We're still bullish. There's nothing against that. If we go to our lower time frames, like the 15-minute, and we turn on our charting tool, get rid of some stuff, or everything from yesterday is not interesting anymore, except the 2022 model that we had perfectly hit 3.5, -4 standard deviations. So we started to see the rejection. We have bullish SMT divergence between ES and NQ. And like always, not like always, but right here we had our market structure shift, but we simply continued to expand further to the upside without giving us a chance to enter. Midnight, London, new week opening gap, previous week's high. Daily candle being bullish. The 8:30 opening already happened. Here we have that 8:30 level. New day opening gap, that's all done. So let me get rid of the drawings from yesterday's 2022 model here on NQ. We have the Asia and London kill zone box on. So let's just watch NQ here on the 15-minute and really see what it is up to before the New York Open. Get an hourly candle in the next 10 minutes. We can measure our entire expansion or move to the downside. 50% would come in right here at 15,331. Let's check what we see on the 4-hour time frame. On the 4-hour time frame, we would assume a change in the state of delivery, but we also have relative equal highs up here. Like we already said during the London live stream, we would expect a retracement continuation lower to take out a little bit of more sell side liquidity, but of course we don't have to. 5-minute time frame, let's do that. Turn on the indicator and then we are pretty much good to go. See if we can identify anything on the 5-minute. Asia consolidation, London took out the high, took out the low. Also took out the low after taking out the previous day's low right here. We have our daily volume imbalance here on Nasdaq. Delivered into the lows. Continued rallying right away without really giving you a chance to enter. Maybe right here. So this would have been our breaker block. The highest up closing candle between this low and this low right here. We closed above on this bullish candle. We retested the breaker and then, the train has left the station. Really, this would have been your best entry here, just based on a 5-minute time frame, really. London session high taken. Use that as support to simply continue the run. Pretty much done for the ES analysis. YM is running as well, but we close this chart. Done with that for today. On ES, we took out the previous day's low, this orange line right here. Let me clean up, first of all the drawings from yesterday. The unicorn setup during London. Short-term high cleared. Our yesterday's New York session short. And we also want to see the London kill zone box, so we turn that setting on. And put the higher time frame candle further to the right. So we already have a good feeling of what we're looking for here on the 15-minute time frame. This morning during the London live stream, I still have the drawings on my chart. We saw the London open and the consolidation afterwards. So right here, London opened up, consolidated until 345, where we started to break lower. We had our market structure shift paired with the fair value gap, a volume imbalance for an aggressive, momentum continuation entry. But unfortunately, we never came back to hit the fair value gap. Once it formed, we immediately continued to run the Asia sell side. After just ticking the Asia sell side, we reversed, pulled back to the midnight level and continued lower right here. So it's actually time to remove all these drawings here. If we look at the lows, you can see that we have this bullish SMT divergence. NQ took out the lows right here, made lower lows, while ES made higher lows. That would be the time where you would like to trade NQ over ES, because NQ took the sell side liquidity, while ES did not. And it potentially still could. Right, we spoke about the breaker block. We made a lower low. Breaker block, highest up closing candle, but without the entry right here. Broke back above the VWAP, kept holding support in this gray box, which represents the new day opening gap. Continued higher, took out these London open equal highs. And also, no, that's yesterday's low. So the London buy side has been taken. We simply continue the expansion. Let me open up the ICT all-in-one and turn on the 8:30 open. Previous week's high. We've been playing with these levels. Let's look at the entire week. What we've been dealing with so far. We had a very good trading week. We can't really complain. Monday started out. Tuesday we got the expansion above the previous week's high, previous day's high. London and Asia started to accumulate right at the high, pushing once again above the previous day's high, returning back into the range, pushing back out. Yesterday, very nice trade, catching the top right here on ES, targeting the lows all over right here, continued to expand lower and lower. So here on ES, we basically took out the low of the week right here, of the current week, not of the previous week. The low for the previous week would be all the way down here, because yeah, we had the second most bullish week on ES last week. I mean, we can see that right here. These blue areas are the Sunday sessions. Right here, you can turn it on and off with the indicator. One of the most bullish weeks we've had on ES this year. So after that, we also in the weekly outlook sort of were able to anticipate some sort of consolidation, or at least not just a rally like we saw last week. We kind of got that. So with yesterday selling off from the high of the week, we spoke about that, to the low of the week after taking out the high once, twice, 3 times. Low of the week has been taken. We took the previous day's low, and from here we could maybe even see us revisiting the previous day's high. We will see. If we measure out our weekly range, this is what we're dealing with right now. The 50% of the weekly range, we're almost at that level. Let's see, bullish SMT divergence. Take a look at NQ here. Friday, if we also zoom out, we see that same narrative that we spoke about on ES. Let's see, Monday, Tuesday. No, NQ didn't take out Monday's low here actually. So there comes the divergence, main daily. Let's turn that off. What's the trend line here? Doesn't matter. So on NQ Monday, inside day already taking out the previous week's high, Friday's high. Tuesday continuing really far above that. Wednesday, kind of a whipsaw day. Same goes for here, but we can see that, the difference between ES and NQ here, with ES having cleared Monday's low, NQ didn't even clear Tuesday's low right here. Still holding up very strongly above the previous week's high. 8:30 open. We're at the high of the day, so the only thing I'm really looking forward to with the New York Open is some market structure to allow me to trade a 2022 model short. If we do not get that, and then we simply have a no trade Friday. There are worse things to end the week with. So if we do not get a setup today, so be it. I mean, yesterday we caught the high of the week. We had a pretty good trading week. The account is in profit after 5 trading days. And it's all about consistency. So we're not trying to chase anything and rely on our gut feeling / intuition. We simply try to stick to our rules. That's what we've been doing for the entire week and for the next 61 more days. All right, but we want to see some market structure for a market structure shift. Take out these lows, basically. That's what I would be looking for with the 9:30 opening in half an hour. If it happens to be a fake out, if we look at the entire daily range so far, measuring from the high to the low, what we also see sometimes is the 2022 model fail, deliver below the 50%, take out some sell side, then immediately displays back to the upside, hold support on a breaker, and continue back up. So we would also be able to play a potential unicorn setup. I will record a video very soon this weekend about the unicorn setup. And yeah, but other than that, we have news at 10. So I'm gonna mark that on my chart. News. Let's see if we have any questions. Until then, market structure shift on the 5-minute time frame would come in once we close below the slow. Old resistance turning into support, London session highs. Just a rough area, we close above, we hold support. Simple, yeah, support and resistance techniques. Let's see what happened around this bearish value gap that delivered lower. We pushed above it and then immediately used it as support, like we would expect any inversion fair value gap to do. If we take this higher and check out this bearish fair value gap here on the 5-minute, we already have hit that now. We have perfect equal highs, looking at this little short-term high here and this high right there. So eventually we'd expect them to continue back above that. And if we look at this bearish fair value gap that eventually delivered into our previous day's low, that's aligned with our previous week's high. Here we had the first day high of the week 2022 model. Hit 4 standard deviations. We covered that on the Discord with a internal 2022 setup where we formed a high, a higher low, and a higher high. We had the displacement paired with a bearish fair value gap and a breaker block, which have been perfectly respected, which eventually delivered into the previous day's low. So that was yesterday. Today we're more bullish. So far, we will see how that's going to play out, but I think we've covered all the charts now. Here, perfectly. We checked it to the tick of the midnight level to take out London sell side. Let's see what happens after we take out London sell side, if we get the immediate push back up, back above the current high of the weekly candle. NQ 5-minute time frame. Let's zoom in here, and then we should have everything ready. Just waiting for New York to open up. Got a good feeling of the market. Let's see. Any questions on YouTube? Nope, not yet. Usually we get more people joining once New York opens up. Let's check it out on Discord. $300 on 4383 on ES right now. 4383. Can you send me the link again for the bookmark live stream? Perfect. Yeah, 355 up here. So almost no liquidity here on ES to the downside, but lots of liquidity to the upside. 355 short positions to the downside. Let's see if it wants to give me better quality here in a couple of seconds. So 385 would be right up here, paired with this bearish fair value gap. Price should be drawn to that. Hand raising is disabled. Should work now. Do you think Unicorn setup and Model 2022 could be a good combo? Yes, I definitely think so. That's going to be my fail-safe method going forward. So if I see an immediate displacement of the 2022 setup, probability is very high that we that the unicorn setup is playing out if we have some good liquidity to target on the opposite side, because then we can with high confidence say that the opening move at 9:30 or at the London Open was with high probability a fake out move to trap traders into a specific direction, either long or short. And then we want to see the immediate displacement or liquidation of these shorts, targeting buy side above, like we saw on Tuesday and Wednesday. Right here we can look at that inside our bento book. Right here, going over to the unicorn model journal, looking at the specific setup right here, 9:30 open, taking out sell side below the 50% of the entire daily range measured from the low of the day to the high of the day, with the 2022 model coming from the high of the day, paired with a bearish share value gap here on the 5-minute. This candle, this big bearish candle, was the 9:30 opening candle. Continued to sweep sell side. We entered on that, but immediately got stopped out before 10 a.m. even. And yeah, this way we can, unless we chop around and do seek and destroy, very high probability, especially with proper buy side targets above, like the previous day's high and the previous week's high, that we are going to continue to expand to the upside, simply playing the exact same model, but now actually taking a long at the high of the day, because we can say with high probability that the opening move was a fake out to trap traders short, to get longs, to sell into the hands of market maker buyers, continue back to the upside for them to pick up more orders. So I think, yes, they do go hand in hand, but we want to see the displacement happen very quickly. Like another example would be here for the London session. Initially we had a bearish market structure shift paired with a, hang on, where do we have it? Yeah, unicorn model bearish market structure shift. We entered short on this bearish share value gap, got stopped out. But you see with how much momentum we've been stopped out. This way we can tell that the London opening move, starting here right on this black candle to the downside, below the 50% of the daily range, was likely a fake out move to get long positions to sell into the hands of market maker buyers. Quickly displaced to the upside, leave behind equal highs. We have previous day's high buy side above us as well. We retrace, keep holding support around the break gap, paired with a bullish share value gap, the New York midnight level also below us. That should really help us not getting stopped out here, unless we take out lows, take out highs, take out lows, take out highs, and basically do seek and destroy price action here. Yes, you have to make sure. I was about to get to that question. Turn on the kill zone boxes, and then you can modify which boxes you want to see right here inside the kill zone box settings. If you want the backgrounds instead, you can turn on the kill zone backgrounds. Then you get a little highlighted session. Let it load up here quickly. London session, Asia session, and New York session. Alright, we start to retrace. We still have that liquidity above, I think. Let me take a look. Yep. 279, 355. They started to pull some of these orders up here. 270, 297. So they moved them from here closer to price. Only blue to the downside. 20 minutes until interesting. We keep that open. See how that goes. See if we have any questions on YouTube. Have you tried turning any of the ICT into an actual A? No, I have not. I don't think that's how they are supposed to be used. I have a friend, one of our accumulation zone community members, who traded a MT5 script using the Phantom Judo Swing model. Maybe you've heard of that. Phantom ICT, I think is his name on Twitter. He's trading Euro US dollar and British Pound US dollar, turn it into a script, letting the script do all the work. But yeah, longer backtests show really that, I don't know, only works during specific years. And if you modify the settings, you end up overfitting the strategy, where it really, I don't know, I think ICT concepts can be merged with indicators, or but they only should be used as a helping tool for your analysis. Yeah, letting a EA decide if you count this as a market structure shift or not. There are just more things that are important, or other things that are more important. I don't know. I think it's best when human and machine work together. I know it's harder, and an EA sounds like the easy fix to most of the trading issues, like, I don't know, emotions most of the time. That's why beginners in the early stages often end up with choosing automated strategies, blah blah blah, by bots, until they realize, most of the bots I have spent money on so far aren't really profitable. Why is that? Blah blah blah. So I don't think the solution to completely automate ICT concepts is the best solution. It's not that hard. Spot the setups, and you can still manage to be profitable without struggling too much. I believe that, at least. I think there are some ICT algos out there, like an EA, like you suggested, or bots. But if they were so super profitable, well, either the people or the creator didn't decide to sell it, or if they decided to sell it most of the time, there's a reason why they're selling it, because selling it makes money, while the EA doesn't really make money. People always go for the easy way out. So if they see, oh, there's an algo or an EA, automated strategy, for these ICT concepts, meaning they don't have to learn anything and don't have to worry about their emotions. They don't care about how much they have to spend in order to get the algo. So no, never consider it, won't consider it. One new mention, Twitter feed. So let's see. We're pushing back up, kept holding support on that new week opening gap. Take a look at NQ here. NQ is also pushing up higher, already having made a higher high. About to take out the short-term high right here, retracing further and further of yesterday's sell-off. We'll see if that keeps continuing and we get a Friday run or rally, basically. What is the time? 9:15. Yeah, we're simply gonna wait for our market structure to be put in place. Like yesterday, higher high, higher low, higher high, higher low, higher high, higher low, higher high, until whenever. And once we get that shift and our fair value gap, we take that short into sell side liquidity. Bitcoin broke 37,000. Pretty cool. Let me check out CoinGecko. 37,114. Yesterday I had a little trade running on Eve. Got in at 1950 and sold at 2100. That was nice. I don't really trade crypto too often, but yeah, if I do, it's good fun. Sol is at $49. My beloved chain links are almost at 15. I love my chain links. I kept on buying and buying and buying, and as painful as it was, buying on that dip, accumulating for such a long time now, over the past, yeah, almost 2.5 years now, starting to pay off. Uniswap, Polkadot, yep. Polkadot would also be one of my top picks for the next bull run. Just based on their fundamentals, their team, co-founder, all that stuff. Where's the max chart? My internet connection really doesn't allow me for much room, so we're just gonna skip all that stuff. We still have all that liquidity above us, but internet is not willing. Yeah, heard that ICT isn't the way to go with full automation. You want indicator-based strategies for full automation, I'd say. Bounced, NQ made the higher high. Bounced off the highest bullish fair value gap. 2 minutes. We still have 12 minutes until the New York Open. So we can simply keep on going with the Q&A. If you have any questions regarding maybe the Black Friday sale, the memberships, the accumulations on memberships, what we do on a daily basis, what's included, or simply questions regarding ICT concepts, what we do in the 66 days challenge. Questions about prop firms, future funding firms, or CFD firms, whatever questions you have, just pop them in the chat and yeah, we talk about it. Finally, some sun outside. Nice. Let's see if we get a quick entry, quick profit today. That would be nice. Spend some hours outside. DXY is pushing back up after taking out the London equal lows, rejecting off the midnight. So if we now close above the midnight, that would be a market structure shift. Sure, we could find a fair value gap on the 5 minute for a 2022 model from the low of the day after taking these equal lows. Bouncing off the daily inversion fair value gap, this purple box down here. And like we said, higher prices on the DXY likely lead to lower prices on the indices, blah, blah, blah. Daily time frame. Retrace to the 50% of yesterday's range. Did we? No, not yet. 4380. We failed to make a higher high while NQ made the higher high. So right now there's bits of SMT divergences visible. The market structure shift would come in below the slow. MSS bearish. We would wait for confirmation though, close below the slow. The time is 9:20. 10 minutes until the New York Open. And 40 minutes until we get the consumer sentiment news. Let's see if we've got any questions. Nope. You're just testing some stuff here, Agent Smith. Speaker, now you requested to speak. No, I've got my computer on mute, otherwise that would interrupt the YouTube live stream. We can do that stuff during London or after the regular live stream and hang out here for a little. headset Christmas gift. I have a headset, but yeah, I didn't put it on today. A good one. I have a good one. Hang on. No. Yep, got a pretty good Bose headset. I like it. Let's check out the YouTube. Depends. I do ML and seen some nice threads in the quant community fully automated. Oh, everyone's different. I don't, or I'd say I gave up on automated strategies. I've been looking at many of them. I'm sure there's some new things and some strategies that simply work over the long run. If you're cool with that and you want to let a bot trade your capital, then sure, go for it. With future funding firms, you can't use automated strategies, at least with trader weight, and I really enjoy trading manually. So yeah, no, not really interested in fully automated strategies, but everyone is different, and if you do, they're awesome. I mean, back in the days here on the Accumulation Zone channel, that's what we started with. We looked at, basically all these YouTubers that tested strategies for 50 trades and then said they have a 90% win rate. We put all the indicators together into a Pine script code and ran a backtest on TradingView, basically debunking these strategies. Barely any of them were profitable. We still have all these strategies in our Accumulation Zone Google Drive, which is part of the VIP membership, where we have all these, my strategies, machine learning strategy, MACD strategy from Pine Trades, where the entire source code for the TradingView's automated strategy is inside, ready to go. Good old days. Yeah, I'd say so too. And I like the challenge. I want to be able to trade and make my money instead of letting a bot do that. And most of the time, I don't know, there are some, I'm sure there are some good ones out there. Don't want to say anything against it, especially if you're invested into that community, but I don't know. The only really profitable bot that I have running has nothing to do with Forex or blah, blah, blah. It's only a crypto grid trading bot where you set a grid and it's buying and selling at specific levels. If you find good pairs, like ETH, Bitcoin, for example, with lots of wicks, you most often happen to buy the lows of the wick and sell back at the high on the opposite side. That's pretty cool. But also depends on the market conditions, like every strategy and bot, of course. So yeah, that's the only bot I really have going on. Simple grid bot trading strategy that makes some money while I sleep, but also loses money while I sleep. So just part of it. But regarding MT5 strategies and all that stuff, yeah, not my trading style. And like Omar said, if there was the one purchasable, fully automated strategy that would work and make simply consistent profits, I think everyone would be using it, and it wouldn't take too long for, I don't know, other YouTubers to share them on their YouTube channel, like, oh yeah, this cool strategy made me 10 millions of dollars in the last 1 hour maybe. I don't know, that's what the thumbnail would likely say. But yeah, So I think we would have heard about it. If I would develop a bot that's really profitable, I would lock it up, let it run, and tell no one about it. Simply because if too many people copy and use the same strategy, well, market makers can counter that. Imagine, let's say, just 25% of all traders, I mean it's a lot, but would use the same exact strategy, even if it's less. Like with some prop firms, you can't even can't be more than 100 people using the same strategy because of liquidity issues, especially with CFDs. But point being, what did I want to say? You're a market maker, you see it on your screen. Oh, okay, there are these 1,000 people that entered along with the EMA crossover, and you just hit one button to counter that, and yeah, all these traders lose their money, you make profit, and you can do that consistently. That's the reason why if I would develop a super profitable strategy or a normal profitable strategy over the long run, I would tell no one about it, lock it up, set up a VPS or, I don't know, rent a server, and let it run. That's what I think what most other developers would do, because it just makes sense. And if it doesn't work, well, you can still make money with it, selling the dream of making money while you sleep. Whereas what's the time? I think 1.5 minutes left until the New York Open. We keep on making these higher highs and higher lows on NQ. We respect each and every fair value gap we leave behind. ES also left equal highs behind. Pushing to the high of the day. Once again, we got rejected from the midnight level here on the DXY. But let's just patiently wait for the New York Open, follow our plan, and not worry about anything. How they know love crypto at all of a sudden their bags are filled for sure. That's what you do. That's what market makers do. They what do we call that? I mean, every time you get these news like banking crisis, FTX is collapsing, FTX liquidations, FTX assets are being frozen. If you really look at the chart, I mean, didn't really receive great feedback on my Bitcoin videos, so not sure if I'm going to continue that. So yeah, I don't know. All that happened is every time you see these major news events, we formed a low because people want to sell into that. Chart has already repriced for the news, and yeah, everyone being bearish, selling helps BlackRock and other great financial institutions, not great, but big financial institutions, to buy at a cheap price. And once they have their bags filled up, what do? They turn on their marketing. Oh yeah, ETF here, BlackRock is deeply into this project and invested in crypto, getting all the retards that sold the lows and back into Bitcoin and Ethereum and all the other cryptocurrencies, pumping up price, making BlackRock make money. I don't know, it's a fool's game. We had a push at the New York Open, pre-New York Open, 925. NQ as well. Let's see, here would be our market structure shift. We do not have SMT divergence. Our market structure shift level would come in right here. And ending the crypto conversation, the only way you make money is you buy when people are fearful and you sell when we're in extreme euphoria, or when your grandma or your mom, whatever, is talking to you about Bitcoin. Oh yeah, I've heard about or I read about that Bitcoin thing in the newspaper. That's when you hit the sell button. And when no one is talking about it, that's when you, in the shadows, keep buying, keep buying, keep buying. eventually DCA into, like I did with Chainlink, and now I'm up over 300%, relaxing, letting all the other traders or investors jump in when Bitcoin's at a new all-time high for me to be my exit liquidity. It's that simple. That's how I played it last bear and bull market. That's how I'm playing this one. I have a very old video, roughly 1 year ago, of how I'm playing the bull market. Only had, I think, 80 views. Not really popular on my channel, but well, missed opportunities left and right. Let's see if we get our market structure shift. We're already in on our Apex account. Let's log into the trade day account for the challenge. Rejection wick on NQ. DXY is still undecisive right now. Gut feeling wise, I'd say bullish on the DXY, taking out equal lows, hitting a wall up here, relative equal highs, London session buy side high of week above. Let's see, 2 minutes to go. We want our market structure shift, ideally with a bearish fair value gap on the 5-minute time frame. New week opening gap would be also nice as resistance. A nice momentum candle to the downside. Followed by a fair value gap. We place our limit order on the fair value gap. And in case we get our entry, let's say something like this for our bearish fair value gap, and it happens to be a Judas swing or a fake out move at 9:30, and we do something like this. So let's say we get our fair value gap, we get our entry, we immediately displace to the upside. We would simply use this highest up closing candle, use it as support, and target buy side, because then we can, with high conviction, say that the 9:30 opening move was to get rid of some of these longs that are already in the market, get buyers to sell into the hands of market maker buyers, and yeah, accumulate a bigger position immediately, at the same time trapping short bias traders into the market like us, who look to sell the high of the day, what makes sense. But even if we're wrong in that case, we could still play the unicorn setup like we did on Tuesday and Wednesday London session, I think. Yeah, Wednesday London session, to compensate our loss. The probability is still there that the 2022 model plays out. That's why we simply take it like yesterday at the high of the week. We're at the high of the session, 925, took buy side liquidity, short-term high cleared, market structure shift. Nice run to the upside, relative equal lows. Didn't take out the pre-Asia session lows above the midnight. That's why I look for shorts until I get the confirmation that 9:30 has been a fake out. We continue further to the upside. So let's see. Got 5 more minutes to wait before we get a potential setup. We look at, like always, same process over and over again. We measure our range from the low to the high. 50%, sell side below the 50%. We retrace into a discount to continue into a higher premium. PD arrays, premium discount arrays, that's what it's standing for. This is our daily PD array. Keep that in mind. Don't want that on our chart right now. We want a bearish fair value gap to be left behind right here. Ideally get filled. During London, we had the exact same setup, but didn't get filled. So we can already prepare ourselves mentally to be in a trade, prepare ourselves for a loss with proper risk management. So in case we lose, we do not blow up our account. 2-to-1 risk to reward. Using this fair value gap entry would come in at 4,360. We have news at 10 AM, so we also keep that in mind. That could potentially be the unicorn model playing out, but could be, who knows. We simply play the probabilities with our edge. And like I said earlier, you either play your edge and do proper risk management, so in case you lose, you don't blow your entire account, and trust it. Or you don't have an edge, and your edge is simply your intuition and your gut feeling. Simple. You can choose between the two. For the 66 days challenge, it's really for me all about sticking to a strict set of rules, targeting my 2-to-1, and done. Nothing else, no intuition, no scalps on a 1-minute time frame. We've been doing that here also on the YouTube streams and also on Discord. We will likely do it again after these 66 days. This is just a little challenge for myself at the end of the year. See if we can pass a funded account challenge by simply sticking to one setup, streaming live during London and New York. See where we can take it. That is all it is about. So, 2 more minutes to go. Equal lows, we do not want this potential inefficiency to be filled in. Take a look at NQ. Well, what do we see on NQ? We took out short-term low, but we didn't close below it, so no market structure shift confirmed, and we're now making a higher high. So more and more SMT divergence here, really. The DXY is pushing to the upside, like our intuition, gut feeling kind of predicted. We stick to the 5-minute because eventually you're gonna find a fair value gap here on the 1 or 3 minute, but we stick to our plan, like I already said. That's the whole idea of these 66 days. Being consistent, we can see NQ is strongly pushing to the upside. And the XY is rejecting again. We could see that same thing here on ES. And we simply got protected from a potential loss. 930 movement to the downside. So theoretically, if we get our displacement to the upside now, this could be a unicorn displacement. 930 fake out move, market structure shift to the upside. But keep in mind we have these news at 10 AM. Bullish volume imbalance here on the 5-minute. I would anticipate the ES S&P to follow NQ here, being really bullish. Back at yesterday's new day opening gap. We'll keep an eye on it. No entry opportunity for us here on the 5-minute time frame. I know there's a 1 minute, or I don't know, some ICT traders go down to the 5-second time frame to spot a fair value gap. We don't. We stick to one time frame. Or let's say 2 time frames. I would even consider something on the 15, but nothing on the 5. That's our lowest entry time frame. So not FOMOing, not missing out on anything. We see big divergence between the indices, usually indicating not the best opportunities to take a trade. So let's check out Discord, what's happening. Large buy orders, maybe spoof. Yeah, I think so too. Imagine the bank run that will happen, and how will crypto be possession. Yeah, we will see. You posted a video on that? Not yet. I will do. I make sure of that. I will create one on the weekend and upload it. Let's see if we have anything on YouTube. Oh yeah. Just depends on the individual and your experience, obviously, not with just TradingView EA and MetaTrader. Yeah, I think to really make a automated system profitable, you need more than just the regular retail tool, I'd say, using API calls to automate a strategy from TradingView to your broker. I don't know, that's only what retail traders do. The algos that do work, I mean, they're mostly set up right next to the exchange to have the lowest possible latency, the quickest data, or the super quick data information, or getting the data very quickly without, like I said, the latency. And a very expensive setup, nothing you can purchase online when you Google profitable trading bot. Let's see what we find. Making a profitable trading bot in 7 minutes with ChatGPT. Oh man, that's so awesome. Free bot makes 600% profit. Oh. Well, let's see. Definitely user-based. Some like manual, some automated. I'm funded manually, but personally I'm bored, so bored to try something new and challenging. Most strats I've seen is martingale plus grid. Yeah, it's definitely a good method. Martingale plus grid. But yeah, I don't know. I'm funded as well. And when I'm not trading, I don't know, I look for hobbies besides trading. Good morning, RTY buy side, then crash every day. We'll see. Let's see what ES is up to. Check out the 1 minute. Nope. Not for me. NQ is still super bullish. Let's check out RTY here. I haven't looked at the Russell in a long time. Big moves. I would have to run backtests on that first. Right now I'm doing well without it. NQ, let's go. DXY. Yeah, still playing around. No, it's not a trading plan, it's just, I don't know, looking for an entry. Yeah, desperately looking for an entry. That's what I say it. You either have a plan or, like I said, you trust your intuition. You see NQ going up, you expect the S to go up, and you look for a inversion fair value gap maybe. You take that because you have that high conviction gut feeling that ES is going to follow NQ. We're not gut feeling traders, at least right now during the 66 days challenge. So yeah, we avoid that. We're about to maybe get a new displacement to the upside, but not on this candle. Maybe the next candle. Take out a swing low. We had no fair value gap, so we didn't enter. We didn't look for anything on the 1 minute. Otherwise, we would have been stopped out. So we've protected ourselves from that. Right now, this would be a unicorn setup. We take sell side, not really below the 50%. We have equal lows below. So we could also just be chopping here on Friday at the high of the day, at least until we get 10 a.m. news. But once we close above this high, the highest up closing candle would become our bullish breaker block. Maybe we leave behind a bullish value gap around this area. We could look at the slowest down closing candle, or this down closing candle in general regarding the body as our order block. Bullish order block. Could even bounce from that immediately, continue back above the previous week's high, and maybe up higher into yesterday's high, being the high of the week right now. We will see. NQ is already running into the high. Really strong push here on NQ. Let's see. You also see a whipsaw like we saw yesterday during the New York Open on NQ. Wait for 10 a.m. news. 15 minutes to go. We check out the 15. Yeah, nothing here. 5-minute time frame. Let's see what's happening. Market structure shift is not confirmed yet, so we simply wait and wait and stalk our prey before we strike for the next attack. We were about to enter, we didn't get the fair value gap, so that's good. Not a loss. That's what we like. So rules avoided us from taking a loss. So right now, if we continue higher, I would expect this order block right here to hold support. This candle took sell side liquidity, shifted structure to the downside, has been displaced. So expecting support from here until we close above here, then we could label this as a bullish breaker block as well and have more confidence that this area can hold and that we do not need to retrace further to take out more lows. Simply, continue back to the upside. Where did we see the low of the wick? Old London session high. We spoke about that at the beginning of the stream. London session high. Bounced above that, got really close to the VWAP right here. And pushed back up. DXY rejected again, being trapped down here. You can see the bodies are relatively speaking in a little box. We're still respecting the bearish 15-minute fair value gap here. If we go to the 1 hour, just chop. It's Friday. Friday for me is really all about capital preservation, especially if you are a intuition trader, or a gut feeling sometimes sounds not right, but yeah, some of the best traders, they simply trust their intuition and their gut feeling because they have it developed so well over the years. Of course you still lose and you will be wrong sometimes. It's like just with playing a rule-based strategy, you let the probabilities of your intuition or your gut feeling play out using a proper risk to reward, and your edge is basically your intuition. How to confirm if it is a trade for reversal model? Why didn't we take the trade when it was MSS and pullback? Because we didn't saw the bearish fair value gap. So we had the MSS, we expected the reversal, but we didn't leave the gap between these three candles. So we had the up closing candle that took the short-term high. We can put that on our chart. We cleared the short-term high. The short-term high cleared. We displaced, we closed below our lowest point between this high and the higher high, close below. We had the potential for a fair value gap. We already had it drawn on our chart, but this candle, this new 935 candle, immediately rebalanced this bearish candle, so we don't leave behind a 5-minute time frame inefficiency. So instead of leaving behind a inefficiency, this candle continued lower, rejected, and wrapped itself around this bearish 930 opening candle that took sell side right now. That's why we didn't took the trade. It then closed back above the market structure shift level. NQ is pausing right now. We have 10 minutes until news. I wouldn't expect them to be like, I don't know, like FOMC or CPI news or NFP news. It's just consumer sentiment where they ask 500 consumers about how they feel about the economy right now. Of course, market makers are using that to their advantage and delivering price into a specific direction. We will see. Now we have a bullish fair value gap right here, but we wouldn't take that with the unicorn setup because we didn't close above. So if we would have closed above here, we could have played the unicorn setup. Like I said, I'm going to make a video about this. I'm going to stick to the rules. If your intuition says that we're going to continue higher and the wick is enough for you, you can play it. But I think we're going to see some seek and destroy here, maybe even before the news. Who knows? Something on YouTube? Nope. If you have any questions, feel free to ask. We also have the accumulation zone Black Friday sale going on for all the YouTube viewers. It's the only time in the year, like last year and the year before, where we do a Black Friday sale on the VIP membership, the ICT All-in-One Indicator, Scalper Pro membership, whichever one if you want to sign up for a lifetime, there's also a discount code for that. Check that out on the Discord. if you want. Otherwise, yeah, you can also still enjoy the free YouTube stream. So let's see. I'm quickly going to the bathroom. We have 8 more minutes until news. We're still holding this order block, so let's see what happens. Bullish share value gap. No market structure shift at least. Not confirmed with a body close. NQ holding up relatively strong here. And the DXY now pushing strongly to the upside. Let's see what we'll get. Right now, the target for me would be each and every one of these highs. We could also see some sort of a trend line maybe. We already took out the London session low after sweeping the Asia high and Asia low during London. Now during New York, starting from 8 AM, we took out these equal lows during London, kept bumping into the midnight level, getting rejected. Maybe we now get the push that we need to hold support on the daily inversion fair value gap, this purple box, to continue to push above the high of the week, which would likely lead to lower prices on the foreign US currency pairs and maybe even the index futures. We will see. I'll be back in no time. Still holding up. Let's see. Want to see what Nasdaq is doing here. Nasdaq continue to make a higher high. The DXY is pushing strongly. We already took out the first high that we spoke about, short-term high. Let's see if we can continue to push from the low of the day back into the high of the week, high of the day. 4 more minutes until news. We'll see what that delivers. So far at the New York Open, we didn't engage. We formed a higher high, higher low, higher high, lower low, higher high, lower low, higher high. That's classic seek and destroy. I saw the tweet from ICT where he, I think, went short somewhere up here on 1 minute. But you have to decide what you want to do. You simply can't copy someone else. I mean, he's got more skill than you likely. He's been at the charts for a longer time, more screen time, watched thousands of New York Opens, I think. And yeah, it's just skill. He can trust his intuition. If you're starting out, I think the best thing to do is to stick to a plan and a specific model. That's what we do here in the 66-day challenge. So far, now we are still 2.5 minutes until the New York Open. What we've been doing for our trade day 50K challenge. We started it this Monday, took a half risk trade with half the usual risk. On Monday, we lost that. On Tuesday, we lost during both London and New York session. A little bit more than I really want to lose with 2 trades. Should be around $550, maximum $600. $631. It's really not ideal. But on Wednesday, the day after, we lost 2 trades. We won 2 trades during London and New York, all shared on the live stream. On Thursday, we lost during London and we had a win, catching the high of the week on ES. And so far today, on Friday, we haven't had a entry. I still journaled it because I want to look at it in my gallery once the 66 days are over, as a little recap of all the 2022 setups that we took. With the reasoning, I've been very detailed, journaling everything, taking notes, because that's the only way we can learn and improve our edge, sharpen our edge. And Q retracing now as well, the DXY continuing to push, ES, seek and destroy. So for the new market structure shift, want to see the close below here, which is not ideal, because then we have a big range from our market structure shift to our high. We will see. News drop in 1 minute, 60 seconds. Let's go. Yeah, sorry. Little slip up. 40 seconds until news. Let's see if we respect this 5-minute bullish share value gap. 14 seconds to go. And you can use this as an opportunity to sharpen your gut feeling of what's going to happen by simply sitting here, not engaging on it specifically, but just trying to think what's going to happen. And also journal that, of course. If you think higher prices, lower prices from here with the news candle, sharpen the skill. Use the time that you're already spending or investing in front of the charts. We're waiting for your mechanical edge to play out and give you the entry opportunity. So we kept respecting this 5-minute bullish share value gap right before the news. Let's see what's happening. We open with a bullish volume imbalance right here. And Q also retrace into the inefficiencies. We still have that major SMT divergence. No, not really. ES also made a higher high, but respectively, NQ is not really far away from the 50% of the daily wick, this red line at 15,440 almost, and the previous day's high at 15,454. Well, ES has long way to go back above 414. DXY, what are you doing? Nice. Took out the high, took out the high. Intuition was correct. Are done. Over and out. Can take a look at the outcome. Forex Factory. forecasted 6.7, previous 6.8, and now it's 6.3. No related stories graph. Reading into it. Actual greater than forecast is good for the currency. It was less than forecasted. Released every 14 days. Financial confidence survey of about 500 consumers, which ask respondents to rate the relative level of the current and future economic conditions. Inflation expectations higher than previous. Yeah, well, I think that's enough information. Nothing really major. Next week we get the CPI news event. I have my eyes on that on Tuesday. And core PPI on Wednesday. Crude oil inventories, unemployment claims like every Thursday. Retail sales, but yeah, all eyes on Tuesday. No news again on Monday, so we will see what we get on Monday, the day before CPI. We might even end this trading week here on Friday without taking an entry during both London and New York. We would have taken the entry if we would have gotten our 5-minute fair value gap fill, but we didn't. And that's just that. Alright, we're selling off here a little, retesting the VWAP. Same goes for NQ. DXY is pushing, touched the high of the week and cleared the high of the week. Feel bad for people longing Euro US dollar. Let's check out our Euro US dollar chart. So earlier this morning, we spoke about the 2022 model on EU. We had our market structure shift this baby blue line. We spoke about the unfilled volume imbalance here on the futures chart, stop loss being below here. And yeah, 4 targets really. We just expected this inefficiency to be filled in. We would have hit a 1.5 risk to reward ratio or 43 ticks here on the Euro US dollar futures mini contract. Not looking forward to reach the stars. Simply take partials, move your stops to break even. We even had a little fair value gap entry right here, whichever you like the most. I would have played the unfilled volume imbalance. And yeah, from here we got the reversal from the high of the day. If we would invert that scale, that's basically what the DXY is looking like. Took out the previous day's high on the DXY. During London we reversed below the Asia session low. We took out the Asia lows, and now we actually have some SMT divergence going on because the DXY took out the high of the week if we go back to the DXY and invert the scale back to where it is. And yeah, really between the US dollar and the Euro US dollar chart, we would expect perfect correlation. Otherwise, we could anticipate manipulation happening. So right now, yeah, if you're short on the Euro US dollar, we want to see the slow to be taken. Otherwise, we will have SMT divergence between both of them. I've been tracking the Euro US dollar pair the entire week during the London session mainly, because during New York, price is a little bit more volatile and we get moving more quickly than during London, so we don't have as much time. But during London, it's pretty chill, and we've been mapping out these 2022 models left and right. But let's see, we're rejecting strongly from that level. We have bullish SMT divergence between the DXY and the Euro US dollar. Because like I said, the DXY took out the high of the week, and it's now, look at the rejection after clearing that buy side liquidity. Ideally, you would like to trade the asset that took buy side. Sort of one in this scenario with bearish SMT divergence, the asset which is stronger, which pushed above buy side. But not many people trade the DXY itself. Most people trade Forex, for example, Euro US dollar, British pound US dollar. We can see that EU didn't take out the slow, so that's why we have the Bullish SMT divergence. I said bearish before, scratch that, because we don't trade the DXY. Bullish SMT, so as long as we don't take out the slow, our 2022 model from the London session is theoretically still in play. If you don't move your stop around to break even, blah, blah, blah. Bullish SMT divergence, 2022 setup. Asia consolidation, London manipulation and expansion at the same time. We will see how the DXY is going to play. We keep a close eye on that. After clearing the high of the week, if we reject from here and go back to the New York session low at 845, we would anticipate higher prices on ES. Going back to the S&P 500 futures, what did we do right here? This is what I call immediate rebalance. So we had a bearish candle right here at 10 a.m., the news candle. But instead of leaving behind a potential inefficiency up here, the following candle open up right here and push to the upside. So before this candle formed, we had the potential for a inefficiency to be left behind. But as price moved higher and higher and higher to this candle's low, the inefficiency got smaller, 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 smaller until it has been rebalanced, not leaving behind any inefficiencies on the 5-minute time frame. On the 1 minute, it likely filled a bearish value gap. No, it did not actually. But that's the whole idea. Like I said, we're not switching between time frames here on the stream. At least we're not going to the 1 minute time frame unless we want to take a close look at lower time frame market structure. But this is what we call immediate rebalance, which is a good continuation sign that if you're maybe already in a short, not leaving behind inefficiencies is a good thing. We're holding up at the VWAP, the volume weighted average price. You can also take a look at the entire volume profile for the day. Anchored volume profile, daily opening, high volume node coming in right here where we saw the immediate rebalance. Very low volume at the low of the day, but let's see, we wait for our market structure shift with a fair value gap. We're bouncing off the 830 open here for the third time now. NQ inside this bullish fair value gap. We'll see, maybe forming the high for the day, or the high for the session at least. Depends on the DXY really. So until no executions, nothing lost, nothing at risk. We wait for the bearish value gap and see how that goes. But first, before we wait for the bearish value gap, of course, we have to wait for the market structure shift to be confirmed. Inversion fair value gap. If my past self could view the future self, what I'm doing right now, like back in the days, no chance that I wouldn't have taken an entry already after New York opened up and it's already 10:10. No chance. I would have been on the 1 minute time frame, maybe the 30 seconds time frame, because I saw someone on Twitter using a 30 seconds time frame, likely in drawdown. And now here just sitting patiently waiting for my setup to appear. If it doesn't appear until or before 11 a.m. session is none. I didn't take a single trade today, neither on the funded accounts. Simply sticking to the rules for the 66-day challenge. See how far it can take us. Maybe even reach a payout. Like a little documentary. I'm gonna put all the live stream recordings together into one big video on the weekend and do a little weekly recap for the first 5 days. And yeah, see how we continue. Let's see if we have any questions on Discord. strong to the downside. That's what we will anticipate. Book is cleared. Yep. Typical in front of the news. Or ahead of the news. Trading view rejected again from the new week opening gap. And Q inside the bearish Fair Value gap, likely some sort of a, nah, not clean. No clean price action on the 5 minutes, so we don't even look at it. DXY still rejecting, 1.5 minutes left before this 15-minute cycle is over. Sorry, someone's calling me. I'll be... Alright, I'm back. Let's take a look at the potential bearish 2022 model. I don't really see that opportunity happening for a bearish 2022 model because, yeah, like I said, bearish SMT divergence with the DXY, or bullish depending on which chart you're looking at, took the high of the week, while EU didn't take the low of the week. Now rejecting very, very strongly after taking that buy side in that same 15-minute cycle. Let's see if we maybe even get to close back below midnight. Nope, I don't think so. But right now the last level of resistance would come from this inversion Fair Value gap right here. Otherwise we're gonna see the lows being taken again during from the early New York session. Let's see. Yeah, still playing around. 1 minute Fair Value gap has been filled, some sort of a turtle soup entry right here. But right now really we're just consolidating, bouncing at VWAP. Let's see if we have anything on YouTube. Nope, no new questions. Guys, make sure to ask questions if you have any questions regarding prop firms, the Black Friday sale we have going on the accumulations on Discord, future firms or CFD firms, whatever it is, ICT concepts, feel free to ask. Still nothing, still consolidating here. Let's take a look at NQ. Rejected from the 5-minute bearish Fair Value gap. And if you came here to, I don't know, to watch me take 1 minute scalps, not for the next 66 days, or now 61 days really. We've been doing that, but now we're focusing on sticking to a rule-based strategy, proving a point. And yeah, I mean, there are plenty of other streamers by now out there doing the 1 minute scalps based on their intuition, but I don't know, I don't think it really helps. Copying trades based on someone else's intuition or gut feeling, taking plenty of entries on a 1 minute time frame. I think you would learn more simply by being alone and just watching the charts without any distractions, without anyone talking, developing your gut feeling, taking trades, losing trades, making mistakes, growing. But if you want to stick around for a fixed rule-based strategy, 2022 model, then you found the right place. $15-minute inversion Fair Value gap looked okay for an entry, but it didn't look that great. Are you talking about ES and Q, DXY, or Euro US dollar? Those are the charts we've been looking at recently. 15-minute inversion fair value gap. Now we're pushing back from the midnight level. Take a look at the Euro US dollar again. Rejected from here. We have that same inversion fair value gap that kept holding support initially, delivering into buy side. Now we broke below it and we're starting to retest it. So for lower prices on EU, we really want to see, this to hold resistance here on the 15. If we drop it down to the 5-minute time frame, high low, yeah, it would be a bearish 2022 setup coming from the high of the day, shifting structure, bearish fair value gap, 15-minute inversion fair value gap. Let's look at the 1-hour time frame. Yeah, I don't know, 1-hour time frame, bit messy here, but I mean a 2-to-1 could work. All depends on what the DXY is up to. If it's going to continue higher and maybe even close above the high of the week, or wanting to continue lower to the early New York session lows. So during London, we took Asia high and low. During New York, we already took London high and low. Those are the conditions, that most of the time are not ideal. If I would start drawing the New York session here, eventually we might get an expansion, maybe during the PM session. But so far, this is what we consider as a seek and destroy day, where we can see our session boxes taking the previous high and low, session high and low. Whereas here we saw Asia consolidate, London trend, early New York displace, or distribute to the downside, an immediate reversal. Here as well, Asia trend, London trend, New York taking the London high, reversing all the way down to the London low. Asia trend, London trend, New York taking the high, retracing. Or the bullish scenario here, Asia downtrend, London downtrend, New York uptrend. Comparing all these different sessions to what we see today, Asia high and low taken during London, London high and low taking during the New York, really not ideal. Maybe today is just a Friday where you, I don't know, spend time with your family, go outside, spend time with some friends, go outside, spend time with yourself, practice your intuition or your gut feeling on a 1-minute time frame, or simply do some back testing, whichever it is. So far we didn't get an entry. It is 10:20. We have 40 minutes left until I call it a trading week with, let's see, ES. Let me take a look, 15-minute time frame ES. Now I see the 15-minute inversion fair value gap now. Could play, and see we have no wicks to the upside. But that for me personally would be more of a gut feeling call, or opportunity. If you have that conviction that we're gonna take out the low again right here at 6:30, it might be a good entry point at the high of the day. I wait for the 2022 setup to be formed on the 5-minute time frame. I mean, we also have some like I said, before that I wanted to talk about the trading week we had so far. So on the trade day challenge, we're up $326, 0.65%. Our profit target is sitting at 2,500. So let's see how next week goes with the CPA news. Currently with a win rate of, okay, that's not true because, well, I'm not sure if this is counting as a winning trade. Win rate 0%. I think that's bringing the overall average down. So I might have to remove that trade. Otherwise the win rate is going to be messed up. Our equity curve initially started digging into drawdown, $750. Recovered it all with one session, or one day basically. London session loss, New York session win, and so far we stayed flat for Friday. Our history, if we look at the funded accounts, On my Apex funded account right here that I'm keeping track of, I'm up 1.5%, 1.25% up this week. Getting ready for payouts. Take profit trade at 25k. Also no trades today. Yeah, but we are mainly focusing on the trade day 50k account for this challenge. I sometimes still take little scalps on my Apex account or trades without outside the major kill zones. Like for example, if we get a nice PM session 2022 setup, I still take that on my Apex accounts and share the trade ideas with all the VIP members in here, like we did on Tuesday the 7th. Yesterday during the PM session, I mean, we were still, or I was still inside my New York AM session short, so no setups there. And also on Wednesday, we took our win on the live stream. I didn't spend any time in front of the charts. But here we had a beautiful 2022 setup during the PM session. We've caught that right here. Market structure shift, bearish share value gap, breaker block continuation just into this area. We didn't want to like really seek more. Was actually between AM session, so during the lunch hour basically. And with hindsight, okay, no, we did a pretty good job at that. But anyway, let's take a look. Well, market structure shift for me wouldn't really have been confirmed here. We didn't close below, but like I said, everyone has different rules. For some, it's enough if we just wick the low. For me, that indicates a sweep. Makes it easier for me to define what is a shift and what's a sweep, basically. Clear to know, and again, fire down there. Oh, plenty of orders down here. Let's see, we still wait for our market structure shift. Not much happening. NQ still respecting the bearish share value gap. The DXY is pushing, bounced off the midnight level back to the upside. So we see EU likely continuing lower of our inversion fair value gap. That initially was a bullish fair value gap, delivering into equal high buy side, getting rejected, closing below it, now being used as resistance. With the 5-minute market structure shift. Okay, on the futures chart, did we close below? No, we closed right at the low. Well, then it's, I'd say, up to the trader. 5-minute inefficiency, we spoke about that. No, I'd say here, we really had the clearest day confirmation. We took out our most recent short-term high. This was an internal high where we pulled back, paused before we take buy-side liquidity. So we look for the lowest point between this high and this high right here, which comes in at the midnight level. We close below that, leave behind a inefficiency. So really, lower entry, we see the 15-minute inversion inside the 5-minute bearish share value gap. So an entry up here, stop above a short-term high or above this short-term high, target the lows 1.7 to risk to reward. This would be my entry, because at this time right here we really didn't close below it until right here, leaving behind a bearish share value gap. This could have also just been a fractal sweep continuing further to the upside, but that depends on your set of rules. 5-minute bullish share value gap here on the DXY, holding support. All right, nice. ES maybe giving us the entry opportunity we've been waiting for. NQ also selling off. We want to see a bearish share value gap being left behind right here. DXY pushing back up. Let's see, close below this level would be the first confirmation. Then we would like to see a bearish fair value gap, maybe paired somewhere with the VWAP and the 830 opening. We would take an entry from somewhere around this area. If we get the close below here, stop loss, yeah, really, according to my rules, should be at the high. Targeting a 2-to-1 would be all the way down here, because we don't really get our entry right here from the high. Don't want to be stopped out if we just retrace and take out a little short-term high right here. So this would sort of be my entry, just following the plan and seeing how far that can take us for the 50k challenge. For my funded accounts, I will make sure I take partials if we get below these lows again. But for the trade day challenge, I'm simply leaving it at this. But first of all, we have to wait for 1 more minute. We want to see the confirmation close below here, because we made the higher high, lower low, higher high, lower low with the close below, confirm close below. Like I said, many opportunities for you to enter based on your intuition that we continue lower, opportunities for other traders that had a high conviction that we're going to bounce off the VWAP. Lower high, 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 lower high, yeah, no SMT divergence. 18 seconds to go, then we wait for 1 more 5-minute candle. We swap these equal lows now. Let's see if we actually get the close below here on this candle. So here we did some, spend a little bit of time doing seek and destroy stuff. We formed a low coming from the high of this bearish fair value gap. We took out the high, took out the low, took out the high, took out the low, took out the high one last time, and then we continued to deliver lower. Let's really get chopped up on the 1 minute time frame. We close below, so we have again a confirmed market structure shift. Right now, we would like to see a bearish fair value gap to be left behind that we could potentially enter on. For my funded accounts, I always take partials on liquidity. For the challenge, the 50k challenge on the 66 days of consistency, it's a fixed 2-to-1 risk to reward ratio. And Q didn't close below this low, only swept liquidity, looking over to the DXY, continuing to push to the upside. 15-minute time frame, new highest closing candle, open up with a volume imbalance. Taking a look at our EU short. So far playing nicely. If the DXY continues up higher, I'd say EU is continuing further to the downside. Right now, we're reducing the size of our fair value gap, so we get a higher entry. That's what we prefer. 15-minute time frame, no fair value gaps up here, no fair value gap down here. Market structure shift on the 15. High, high, low, higher high, lower low. That's what we would like to see. 3 minutes to go. It's going to be a micro execution. This was our London session. We didn't take that. Just getting ready here, preparing myself. Nice entry at the low of the fair value gap. Right here, micro and mini align. So I know there are ICT traders out there that would place their stop loss at this short-term high or maybe a little bit above that. I don't want to do that. I'm going to place my stop loss above this high. That's the highest point between our market structure shift low, and our lower low right here. It's simply what my rules state. Our 2-to-1 risk to reward ratio comes in below the previous day's low. We just play the probabilities, trying not to think too much about the trades, and see if that works. If I would be scalping this, based on my intuition, I would like to see lower prices once we fill the fair value gap and not, price messing around, taking out the highs again. Simply maybe targeting just 5 points, or let's say the New York midnight level, maybe the previous day's low. But for the trade day account, it's going to be a fixed 2-to-1. Maybe I take a partial below these lows, but really if we get all the way down here, I think it's not too unrealistic for us to hit 4,350. So we have 1 minute left. I think we can prepare our limit order. We have the 8:30 opening. We have our confirmed market structure shift. Fair value gap, yes, yes, yes. We're still inside our kill zone. It's 10:30. So we can create our limit order, manage our risk well, already anticipating the loss. We do not want to blow up. So $250 risk comes in with 4 micro contracts. Let's wait for this candle to close and place our limit order. Mm. 20 seconds. I think it's good enough. I think we're not gonna retrace or get a sudden move back to the upside. Our first limit order is set, and now we do what we always do. We switch between accounts, doing the same thing all over the place. Really makes it simpler for me because, I don't want to spend 24/7 in front of the charts. After the stream scalping, I just make it simple or keep it simple, taking the same trades on all accounts. We have our high, we have our 2-to-1, so I simply risk 4 micros on this one here as well. That's the Take Profit Trader 25k challenge that I'm basically been doing at the same time. And for the Apex funded accounts, I'm simply gonna do exactly the same thing. Set my limit order with 4 micro contracts, risk $250 for this one, and also this one right here, 4 micros. Target 2-to-1 on my funded accounts. I will take partials below here, but for the challenge, strictly no partials allowed. Just to make sure I get paid on the funded accounts. So if we go below the London low, well, I will worry about that later on. So the limits are set. We have our confirmed setup. We're still not filled yet. We have to get back up into this area. How you play it is really up to you and the rules you decide to follow. Can place your stop loss above the short-term high if you believe that we simply continue lower after testing the resistance. If you want to play it safe, I'd say stop loss above here would be the smarter choice, because we could simply see price taking out the short-term high and then continuing lower like we did yesterday. So for me that's my entry. Stop loss at the swing high, targeting a 2-to-1 without stressing. No stress involved. 2-to-1 is on our chart. Let's see. That is my thought process as well if I'm scalping. But like I said, I'm sticking to specific rules, and that's why my stop loss is up there. If you go back to our old live streams, exact same thought process. If we get back up into this area, I don't see price reverse, but because we play the probabilities and our edge states that we place our stop loss at the swing high, I'm simply going to follow that. No questions asked. If it gets up there, so be it. I'm going to get stopped out. but I still have the slight chance that we might just take out the high and continue lower. So yeah, even if I would simply have my stop loss here, I would lose the same amount with proper risk management as I would do right here. And if we're right, if we're right with our edge, calling the high of the day, high of the session at least, I think, yeah, we should really be fine having our stop loss up there. I know I used to think the exact same way. That's what you would assume, having studied ICT concepts and all that stuff. But for me, I think, yeah, that stop loss is going to do just fine. Like I said, you don't have to copy the exact same trade that I take. It's a choice that you can take if you want to follow the 66 days challenge. I'm not worried about the outcome of each single trade because I'm going to be sitting here doing this for the next 61 more days. So stressing about every single entry or position you place, I don't know, be a lot of unnecessary stress. We just took that sell side below the 50%, so we could still see the bigger picture unicorn setup playing out, filling us and immediately displacing above here. Who knows? I don't. I just follow the rules, plain and simply to prove a point. And Q still holding support on this lowest bullish fair value gap. We will see how that goes. Let's check out the DXY. The DXY is rejecting again. We will see. Like I said, we try to not think too much about what we do other than thinking about how we manage our risk, how we place our entry, following our rule set. It's a good thought process, Omar, definitely, but it's more a Scarpa's thought process, I'd say. Not looking for the bigger picture trades like we did yesterday, where I also simply set my 2-to-1 risk to reward ratio and I left the charts, forgot about that I'm even in a position where we took the short. We were right initially, we retraced, got all the way back up into here. If we would have moved our stop to break even, well, we would have missed out on that continuation lower. So I think that Thursday has put in the high of the week. We retraced to the 50%. Now on Friday, we have our fair value gap market structure shift entry. That's how I'm going to play it. We missed our entry by one tick, if I see that correctly, 4373.75. 437 4.25. So we didn't get filled unless the micro contract got into that fair value gap. Nope, also not. So simply no entry for us, at least right now. Could still change. I'm going to be streaming until 5 p.m. my time, so that's going to be 20 more minutes. So if you want to ask any questions, now is the time. Bongo Rambo, hopefully you took your 15-minute inversion fair value gap play, trusted your gut feeling there, or you didn't, which is an issue either. Just observing price action. Nothing new on Discord. Like I said, questions are welcome. Yeah, let's just go back to TradingView and watch price action. We're getting a question, so we're gonna wait. Nothing, like really, your job is done now. If you simply play your edge, you can close your charts and, I don't know, watch a movie, go out with some friends. Can you tell us on VIP chat or trade ideas when this order is no longer valid or still in play after the stream is done? Of course I will. We will keep everyone up to date. I can also say when I will remove my orders. So if we continue lower and take out the low of the day, or at least the 6:30 a.m. low, I will cancel the order and regard it as not valid anymore. but as long as we stay up here and leave all this intact, getting an entry at relatively speakingly high of the day, to continue to make a new lower low, which we didn't do here on ES, we only did that on NQ. I would simply expect the New York session to do the exact same thing that London has already done. London took the Asia high and low. New York took the, well, so far, starting at 8 AM, only took the London session high. Didn't take the London session low yet, so if I see this simply continuing without giving us the fair value gap entry, I will cancel the limit order, and I will, of course, let everyone know in the VIP chat once I do that. Yeah, like that, the job is done. Of course, we have to keep an eye on it until we're filled. If we just continue lower without getting filled, yeah, well, then it's simply a no trade Friday, which is fine too. Just to maybe add to an entry idea would be to ignore the wicks. Yeah, I know that's basically the implied fair value gap concept where you ignore the wicks and you say, okay, right here we have an entry. If we ignore the wicks, this would be a bearish fair value gap. But even at this point in time, well, if we would ignore this wick as well and simply, yeah, if we ignore the wicks anyway, we can turn them off completely and say, okay, we made a higher high, we closed below, we left behind an inefficiency. Doesn't matter if we have some wicks there at all. I mean, it is an approach, but it needs to be tested. Definitely. 100% needs to be tested before we start taking that live. It's something worth spending some time on, turning off the wicks. I don't know. Don't think many people are doing that. But if we say we ignore wicks, there's no point for me to have them even on my chart. I mean, if you leave them on and you try to force an entry, I don't know, I would almost call it forcing in an entry, using this implied fair value gap now because we see it's playing out. Ignoring the wicks, implied fair value gap, kept holding resistance. It's always a possibility, and with ICT concepts, if you want to find an entry, I can 100% guarantee you will always gonna find a entry. It's that simple. You can switch time frames, you can use fair value gaps, you can, even if it's not there, oh yeah, if it's not there, you can simply ignore the wicks now and use a implied fair value gap. Like, yeah. What's the point of that really? I've never used implied fair value gaps. Of course, it's a method to take a trade when there's no possible entry opportunity. If you have so high conviction that you think, yeah, okay, now it's time to ignore the wicks. But if you do use that, I think it's something you need to backtest. And if you ignore the wicks, there's no point in even getting distracted by them on your chart at all. Turning it off and still seeing, okay, what did the last 2022 models look like? Right here, okay, market structure shift, fair value gap right here, ignoring the wicks, got our entry on this fair value gap paired with the VWAP. Right here, another 2022 model took the high. We even took the high right here, so theoretically we took buy side if we ignore the wicks. Displaced, shifted structure, bearish fair value gap, breaker block, kept on holding resistance, continuation lower, new fair value gap, SilverBullet entry, continuation into the previous day's low. So here it would have played pretty well. During the London session on Thursday, market structure shift didn't play out. We got the unicorn setup, kept holding support, just watching the bodies. It's also a way you can trade, but if you want to ignore wicks, I'd say that's at least my opinion, to ignore wicks completely. Otherwise, I don't know, for me at least, kind of trying to look for an entry. I mean, there's nothing wrong taking no trade at all for a specific trading day if your specific setup that you're looking for every day simply isn't playing out. So we saw we just got filled. It is 10:45, so that's a new 15-minute candle right here. We retraced into these discounts. Didn't hit our breaker block right here. So what we do not want to see, well, like I said, it's for me a set and forget experience. I have my stop up here at the high of the day. If I'm wrong about this being the high of the day, I'm simply wrong. I don't think I will play the unicorn model. We will see. Only if it happens right away and we displace within the next 2 or 3 5-minute candles, then I would consider taking the unicorn setup. Otherwise, it's simply going to be a loss. And there are going to be more losses like that. So 4,380, 310 contracts. 4,380, 310 contracts. So just above the short-term high. If I would have my stop loss right here, I'd be shitting my pants. One you mentioned. Okay, that's the Twitter feed. Check out Google Chrome. Why didn't you take the 5-minute bearish fair value gap earlier around 1620? 1620, you're referring to German time, or are you referring to New York local time, 1620? 1620 would have been 920? 20, 28, 20. Please elaborate on that. MJ. So I can answer the question. But 320. 5-minute time frame. I don't see it. Well, I can tell you why I didn't take an entry before yet, because right here we took the high, 930, gave us a market structure shift, but we didn't leave behind a 5-minute bearish fair value gap here. That's why we didn't take a short right with the open. We didn't take the unicorn setup because we didn't close above our wick high. That's what I tested, so that's what I'm sticking to. If we ignore candle wicks and turn them off completely, yeah, we would have seen the unicorn setup. We sweep the low, immediately displays back to the upside, leave behind a inefficiency. Just looking at the bodies, that would have been the inefficiency. Would have failed eventually. We get a new displacement to the downside. Just looking, yeah, well, not getting into the spot wicks, ignoring wicks stuff right now. I will have to backtest that and see if it's, I don't know, maybe a little secret that we can use. But yeah, we didn't play it along because we didn't close above here. I consider this as a sweep. Only if we close below swing points, that's when I'm considering it to be a actual market structure shift. And so far, with our fair value gap method for an entry, we avoided one loss here and one loss right here by, I don't know, trying to get into the long using the unicorn setup without the proper confirmation close above. Got the confirmation close below here. Bearish fair value gap. Whatever happens, happens. We have plenty of shorts coming in at around 4,380. We will see. We have our inversion fair value gap up here. Other than that, not really worried about this trade. Like I said, there's going to be many more losing trades that we are going to take. During our 66-day challenge, one losing trade is not going to cut the difference. It's about the consistency. And we still end up this week in profit, even if this trade is losing. That's all that matters. Also on our Apex funded accounts, even if we close the week in drawdown, that happens with every strategy. If you try to find a strategy where you avoid drawdown at all, well, you're gonna be on a never-ending journey to find that strategy because it simply doesn't exist. So you might as well settle with one strategy that you like, that fits your personality, that you can, trade, execute without any silly mistakes, and leave it at that. Simply go with the flow. If it's a win, it's a win. If it's a loss, it's a loss. Not trying to force anything, and even if you took the loss, not trying to make it back with a entry that's not your edge just because you didn't like losing. You have to accept the fact that you're gonna lose sometimes, some weeks, some days, maybe even some months. Can also happen. There's gonna be months where we simply, where our edge doesn't play out, and there's gonna be other months where we make huge profits. We can't expect. Trading is simply non-linear. Some months will be good, some months will be break even maybe, some months will be very, very profitable where we make most of our profit. Some months we might even lose some, and that's okay. You have to understand that if you really want to do this full time one day. Hey Careboy, good morning. The day is going pretty well. We've avoided, let's go back to ES, haven't watched the chart. We've avoided 2 possible entries by simply following our rules. We didn't see our bearish value gap with our first 5-minute market structure shift right with the 9:30 open. We immediately rebalanced this candle. We looked for a unicorn setup right here, but we didn't close above our most recent high. We only wicked it, so that's what we consider a sweep. Reversed. Now we got our market structure shift below this low. Right here we formed a high, higher low, higher high, lower low, higher high, lower low, with bearish fair value gap, and we already got in short on this bearish fair value gap. Being right or wrong on this trade doesn't matter. It's about the consistency. We have our 2-to-1 risk reward set. For my funded accounts, I make sure I take some partials at the low of the day. Job is done. That has been my day so far. During the London stream, we also saw our market structure shift with a decent displacement. But unfortunately, we never got our fair value gap fill, basically not a single fair value gap fill before we took the opposite sell side liquidity. Before we already would have hit our 2-to-1 with this move to the downside. We didn't retrace into this fair value gap. We didn't retrace into this fair value gap. So in this scenario, the only possible entry would have been a market structure shift, intuition entry, simply expecting it to continue lower, entering once this candle is closing below our most recent short-term low, a aggressive volume imbalance entry, a gut feeling entry that from here maybe we continue lower, a simple rejection entry from the midnight to take out the low of the day like we did on NQ. But yeah, right now we're in the first trade today. Like I said, it doesn't really matter if win or lose. The DXY took out the high of the week. Not sure if EU did. We're gonna check on that. Now 6E, the short. So right now we have 2 contradicting setups. During London we had the bullish market structure shift, and we talked about the long entry down here with our stop below the low and our take profit target. We said at least make sure to take partials inside this inefficiency that's really standing out. Old low could be used as, so old support can be used as resistance. Wouldn't have hit our 2-to-1, placing our stop loss at the low. That's what we do here. We don't place it at any of these little lows. That's just a unnecessary risk. 2 opposing trades right now. We took out the high of the day, shifted structure right here once we closed below this low, left behind a 5-minute inefficiency. paired with a 15-minute inversion fair value gap that was previously used to deliver into buy side. So yeah, just watching on EU like we've been doing all week. Executed on ES, so we're in this micro position short and sticking around for next. Yeah, okay, it's almost 11 a.m. so that's gonna be it for me very soon. German time on NQ. Well, I don't trade NQ, that's why I didn't take the trade. Around 10:20, 16:20. So this bearish fair value gap, why didn't I take it? I didn't even take it on a paper trading account that we're running on NQ because I didn't see this market structure shift. Simple. We continued to make, on the 5-minute time frame at least, put in place these higher highs and higher lows on this rally to the upside. Pushed last time to the upside, formed a higher low, a lower high, and a lower low. Now we form a higher high, maybe even taking out this high. But yeah, for my entry, I would have liked to seen this low being taken, close below, bearish fair value gap for the entry short. Right here, not enough confirmation for me to take a short at all. We have a bearish fair value gap, we have bullish fair value gaps to the downside. The overall trend is bullish, no reason to believe that we shifted structure to the downside. On a 1-minute time frame, maybe yes, but yeah, we're not scalping the 1-minute time frame or trading on the 1-minute time frame. We would have seen our market structure shift once we closed below this 9:50 a.m. low right here, continued lower, but really didn't fill a fair value gap here on the 1 minute. Then that could have been a time where you switch to the 5. After getting your 1-minute confirmation, you look for a 5-minute entry and you look for a, I don't know what it would have offered, depending on how you place your stop loss. If you place it at this high, candle that created the fair value gap, would have hit, yeah, 36 points roughly. We're now pushing on NQ, likely also pushing on ES here. Like said, even if you took this trade with me, don't be worried about the outcome. Just stick to the process and yeah, look at the bigger picture. Sticking or being consistent is more important than winning or losing on a specific day. Going back to the DXY. It's likely why we see that little push here. Could leave some SMT divergence here. Like said, if we get the unicorn setup here on ES, I will let everyone know inside the VIP chat. It's gonna be a VIP thing then. If not, we simply gonna get our stop hit. We managed our risk well. We don't blow up if we take a loss here. It's 5 p.m. so that's gonna be the end, at least for the YouTube live stream. I might hang around a little bit longer for all the VIP members on Discord. If you also want to join the VIP group, we currently have a Black Friday sale going on until the end of the month. You can find all the details on our Discord server right here. There's a link for it here in the chat on YouTube and also in the video description below. Let me check out the question. Yes, Omar. Trade does not look good because it's not respecting the fair value gap. I agree with you, but trust me, I've seen it many times where it didn't respect the fair value gap, and yet with my stop being at this high, still playing out. There's always the probability, okay, we're not respecting the fair value gap, now we have a inversion, but yeah, you really have to simply stick to one thing. Like, you're either trading your edge, and your rule states that if we close above the fair value gap, I'm going to exit my trade and I'm simply done. Or, yeah, like what I do, I don't care if we close above the fair value gap, I only use it as my entry. I have my stop at the anticipated high for at least a session and let the probabilities play out. Of course, yeah, regarding ICT concepts, close above is not ideal because now this bearish fair value gap would be a inversion fair value gap. So if you simply use tape reading to enter into your trades, then you have to wait for the next 61 days because we're gonna stick to that. afterwards, we might do again the tape reading live streams where we simply stay on the 5-minute time frame and interpret price action based on fair value gaps using ICT concepts. What we did before to fund the accounts, but right now we use this approach to prove the point that even if something is going against us, we simply stick to our rules, accept the losing trades if we get them, and maybe even still pass the funded account challenge. NQ almost